Hi everybody, and welcome back to Axiom Token. So this is going to be a general Bitcoin cryptocurrency chat. Also look at the stock market, how that's shaping up at the moment. Obviously that has been reaching some pretty awesome highs, but has a lot of what's it being fed by, that's what's the fuel, and what's been happening there. So we're going to check all that out. Obviously at the moment we're over on investing.com. Pretty good site for general news, and most importantly the data. The data doesn't lie, does it, generally speaking? So we're going to look at that as well. So pretty cool stuff there. Now we're going to have a quick look at one of the chief articles here. First of all, we're going to get into some of the leading prices. So let's jump over to Bitcoin, check that out, and hope you guys enjoy this one. Don't forget to subscribe, like, and share, and hit the bell for the notifications, of course. And let's have a good time talking about crypto and investing generally. All right, so let's quickly check out the prices here. We've got Bitcoin at $32,170 US. We've got Ethereum at $1,828, and we've got Binance at 282. So this is the top 10 we're going to look at. And we've got Cardano at 126, Dogecoin at 24 cents, XRP at 62 cents. We've got a Polkadot at $14.65, and that wraps up our non-stable coins that are in the top 10. So pretty neat. We have a bit of, I guess, an honorable 11 Bitcoin Cash and a Litecoin, and a Uniswap, I guess, up to 13. So a couple of popular names there. Let's go through the top 100, see over the last 24 hours, see if we've got any outstanding ones here. Double digits, can't see any so far. Just checking through that at the moment, see what that's, if any stood out in the top 100. So no, all pretty red, but the last hour looks like we're getting a bit more green in the last hour after it's had a bit of a red day again. So what's the Bitcoin down at 28% in the last 24 hours and 10% in the last 7 days. Obviously Ethereum hit a bit harder, almost down 18% over the last 7 days, down 8% over the last 24 hours. So that's about half of that value. So interesting stuff there. And looks like Dogecoin and that has managed to recover 24 cents. So that's where that's at. Let's quickly go to the comments there. Don't forget to comment in the chat. Always look forward to your views and perspectives on general crypto. Yeah, lots of fun, of course, when we have to look at different projects, trying to find value. Pretty fun there all together. All right, let's quickly check that, and let's go into Cointelegraph. We've got a couple of stories here that are pretty interesting. We've got an SEC inquiry, that's the American Securities Commission, inquiring regarding Robinhood's crypto business reportedly delays its IPO. So that's a pretty interesting story. We've got institutions have, this is probably a bigger one here, though it's have no appetite for Bitcoin at this price level. JP Morgan, obviously I am pretty critical of these groups like JP Morgan. They have a whole ton of clients that follow them, and so basically they can influence this. I'll use the word influence the market in certain directions by their comments. So that's that you've got to be, take that into account. Obviously, JP Morgan's been flip-flopping over crypto and Bitcoin for ages, but yeah, not a big fan of theirs for sure. But anyways, institutions have no appetite for Bitcoin at this price level. JP Morgan should not expect a full bull run for Bitcoin over the medium term based on the BTC to gold volatility ratio. So that's their view. I don't back up their view at all, but this is what they're saying. As Bitcoin price failed to hold its breath above 35,000 on Thursday, JP Morgan expects an overall bearish movement before the critical price level based on a BTC to gold volatility ratio. I don't see that myself, but that's what they're looking at. And a note sent to investors. So this is the powers, right? They've sent a note to investors. I've seen this before, folks. JP Morgan detailed its reasoning to see the fair value of Bitcoin between 23,000 and 35 over the medium term. The bank giant previously pictured a $140,000 roadmap. See what I mean? This is where you're at with these guys. If the biggest crypto currently matches gold allocation and volatile future, but that's off the table for the foreseeable future, they say, which predicts the full coverage of or equalization of volatilities or allocations between gold and Bitcoin is unlikely in the foreseeable future. But really, Bitcoin has a huge speculative play in it, and as opposed to gold. So you can go for it, dust that off if you like. But that's off the table for the foreseeable future. And that's where they're at. JP Morgan also said China's crackdown on mining, crypto mining, basically would have a positive impact on Bitcoin over the medium term, and China's share of Bitcoin hash rate reducing concentration. Not many institutions are joining MicroStrategy. So we talked about MicroStrategy the other day. Hunter dipped buy the dip more than a month after the May 19 crypto crash. Bitcoin funds continue to bleed, even as inflows of physical and gold ETFs stopped. So JP Morgan says this suggests that institutional investors who tend to invest via regulatory vehicles such as public listed on Bitcoin funds or CME Bitcoin futures, what we talked about last year, still exhibit little appetite to buy Bitcoin dip, they say. But of course, we did talk about micro strategy, which are continuing to buy. Including, according to JP Morgan, another major factor preventing a possible run is the end of the 6-month lockup period for the Grayscale Bitcoin Trust Fund, which saw nearly 4 billion inflow in December and January. As Cointelegraph reported, July 19th will see the most significant single unlocking date of 16,000 BTC worth 627 million. So it'll be interesting to see where that goes. Following the April all-time high, Bitcoin has been hovering around 30 to 40,000 last couple of weeks after diving below 29,000 on Tuesday. Well, it was just over on CoinGecko. So Bitcoin price moving around 34,000 according to Cointelegraph Markets Pro. So that was their update. That's their view. They've always been one of those wild horses amongst the, I guess, the institutional corporate players. So that was pretty interesting anyway. We've also obviously SEC, as we talk about looking at Robinhood crypto. Crypto businesses are struggling to fill job openings and industry expansion. So that's obviously with the growth, getting blockchain experts and stuff like that. And particularly marketers. Marketers are often underplayed in crypto. So interesting. Colombian Capital supports blockchain and emerging tech with 2.3 million fund. So a lot of Latin American countries getting on board with crypto. Obviously a great way of help funding them, their societies, and increasing their position as well. So interesting stuff there. What else we got here that's of interest? You've got the SEC accuses XRP army of issuing false statements against its leadership on social media. That's interesting fight back there. Crypto traders say negative funding rates are buy signals. They are, but are they? So you got some interesting stuff going on there. Nigerians secondary school accept crypto payments despite regulatory uncertainty. So you've got adoption going on all over the place. That's pretty interesting stuff. Billions of users adopting Bitcoin, maybe in 10 years. Although we know we don't need billions of people to adopt it. It's a store of value in every case, and on speculative play. So you don't need that many. We see that already with the price rise, don't we? It's where all the big money comes from. That's really what counts going into that. All right, so that's some stuff going on there. Let's quickly jump over to investing.com. We can actually see some of the total markets. We'll actually flip over to the stock market just for a brief period. So we've got Dow Jones sitting at 34,433. So if we sort of max period that, we can actually see in the chart there, it's basically that all-time high, and that'd be going on the back of stimulus spending, looking to come out of the US government. So we'll see where that leads. Particularly, there's a bit of stuff going on there. I've got to be careful what I say online. Last time the channel got pulled down for no reason, so just have to be careful, remembering what platform we're on. So there we are, 34,433. Nasdaq at 14,360. So interesting stuff going on there. Commodities at the moment, you've got oil just going through the roof. Now this is a better sign. Oil's a better sign of the health of an economy, and when the prices start moving up, you know that some issues are around. So here we are at Brent crude at $76, up double since November last year. So you do the math on that, and you can understand what's driving that for sure. So there's a couple of factors, but they're all driven from November. So interesting stuff going on there. With 76, I'm sure in the summer period in the United States that people won't be particularly happy with paying higher gas petrol prices as well. So that's what's going on in the markets. Continues to rise, and you can see the Brent oil there. Pretty impressive on the chart. Let's actually do the last 6 months. I might be able to catch that rise there. Let's do the last year. Actually, we'll do the last 5 years, and that would be some interesting stuff there. So really rising up there, pretty impressive. After really dipping down, what was that? Dipping down pretty dramatically, $26. So there we are, folks. Let's quickly jump over to some of the stocks at the moment. We'll have a look at some of the results. So we've got Apple, at $133 US, Alphabet at 2450. So that's kind of Google. and then we've got Tesla at 671, Amazon at 3,401, Netflix at $527, Facebook at $341, and Bank of America at 41.62. So interesting stuff there on that one. So if you're interested in any of those, Netflix is looking the better one at the moment. Obviously, Axiom Token has Vavel, which is going to try and enter the Netflix space. So, look at the capitalization on that. It's pretty impressive. All right, so let's jump over to Paraguay. I wanted to look at this jumping away from stocks and the stock market at the moment. Is Paraguay set to make Bitcoin a legal tender? Don't bet on it. So obviously, in the wake of El Salvador's dramatic move to make Bitcoin a legal tender, a world first, the internet has been buzzing with rumors that another Latin American country may be set to follow in its footsteps, Paraguay. Those may be somewhat off the mark, however, goes the writer. So some interesting stuff going on there. The articles just sort of saying big leap for humanity. Obviously, the World Bank, they've got to contest with the World Bank with the cryptos. These countries, they do get boxed in sometimes. We want to be a crypto-friendly country, and sure they do. It's probably a much easier way of funding a lot of issues rather than going to the World Bank, which always ties in with some strings attached, as it were. So that's right. Hey, Business 2K's in the chat. Good to see you, Business 2K. Hope you're enjoying this general commentary and just look at some of the news on Bitcoin, crypto, and the stock market's a bit of fun to hang out and talk about this stuff. So that was is the Paraguay stuff. So we'll see whether that comes into play. And watch out for that. So as the rally, let's talk back to stocks again. As the rally in US stocks rolls on, signs of cautions grow. I'd say it'd be much more than cautions. I think it's a bit like a deck of cards at the moment, to be honest. The S&P shook off concerns about a more hawkish Federal Reserve to post a record high this week, but activity in some areas market indicates concern over potential volatility. You have key economic data and corporate profit reports, particularly employment is one of those. US President embraced a 1.2 trillion infrastructure spending deal, has helped buoy indexes of fresh records. So once again, the fiscal spending programs seeing as bullish. Obviously, we've got massive monetary policy spending, printing as well. After worries that the Fed may unwind its easy monetary policy sooner than expected, led to a brief swoon earlier this month. The benchmark S&P 500 is up 14% this year after hitting fresh records in the past week. So really, rather than being driven by energy and productivity, wage increases, stuff like that, it's actually being driven by fiscal spending now. So that's you can take your side of the coin on that. Underneath, obviously, that's inflationary, right? So we'll just think about that for a minute. Underneath the hood, however, there are signs of caution. Short interest in the SPDR has increased to its highest level since this year. Since last year's week's Fed meeting, suggesting the investors have been adding more downside protection. And I'm sure they should be. I think it's pretty wise. At the same time, gains this month have been more concentrated as investors piled back into big technology stocks that led the markets higher last year and for most of the past decade. And that's the truth. And we can see that in the top list that we just saw earlier. If we jump back to here, you can see all these basically apart from Bank of America, tech companies dominating the top ones. So that's what it's referring to. The market has maybe dodged a few scares as we look ahead to the second half. There are probably some more risks ahead than there were a few months ago. And once again, typically when the market has a pullback, it's going to be pretty severe. I think possibly pretty severe, and it's always unexpected, right? You think about 2008, it's going to be pretty sharp, and that's what I'm kind of expecting myself. Investors concerned, including debate about whether rising inflation will be sustained enough to force the Fed to begin sooner than expected rollback of its easy monetary policies. The Fed's main inflationary measures posted its biggest annual increase since 1992. That caused some alarm. As business rebounds from the issues that we've just had, those ones there, the second quarter is also expected to mark the peak of US economic and corporate profit growth, which could bring market unease as growth slows. And Citicorp's US Economic Surprise Index, which measures the degree to which data is beating or misleading forecasts, stands at 26.5, well off last year's peak of 270, suggesting that the strength of the economic recovery is increasingly baked into estimates. That'd be true. Some investors also believe the S&P may be overdue for a significant fallback. Since World War II, the index has had a decline of at least 5% on average every 178 calendar days, according to Sam Stovall, Chief Investment Strategist. The latest market advance has lasted 276 days without such a fall, longest period since January 2018, when a 15-day advance was followed by a 10% drop for S&P. I just think that the drop's going to be massive, to be honest. I think that like I say, I think it's a bit of a deck of cards at the moment. There is lots of support beneath the surface, so that leaves the market maybe a little more vulnerable to news headlines or news scare. So that's some of the stuff there. Next week's focus will be on economic data, including reports on home prices, manufacturing, and payrolls report in June. With inflation and the pace of recovery on the minds of investors, a stronger than expected wage report could stoke worries over how the Fed will react, and after several appearances in the past week. So in other words, if we see wage inflation as well, they might look to increase the interest rates or reduce the printing, as it were. To be sure, there are plenty of factors and suggest the backdrop of equities remains positive. S&P 500 earnings are expected to rise by about 37% this year, almost 12% next year, according to Run IBS. Obviously, that's off a lower base, right? So that's probably the stimulus there. The second quarter for which reports will flood in starting in mid-July, earnings are expected to jump 65%. And once again, off a lower base is the case. Yields remain historically low, with benchmark 10-year Treasury yields down to 1.5%, to about 1.5 from 1.7 in mid-May, helping boost the allures of equities in comparison to other investors. Absolutely. Well, cryptocurrencies particularly plays well in that game, especially DeFi. You can find some good DeFi projects like Axion, of course. So check that out. Still, only 47% of S&P 500 stocks stood above the 50-day moving averages as of Thursday's close, compared to 91% of stocks that above that level when the index was making record highs in mid-April. According to Keith Aluna, Chief Market Strategist of Trust Advisory Services, the average stock in the benchmark was 8.9% off its 52-week high. If you are not in the few stocks that are doing well, you may be doing much worse than the benchmark. Absolutely. And I think that when there's a severe crash, that's going to be the case. That's what I'm expecting to happen. So you look at this chart, and if we go max on the chart, boom. I mean, that's looking pretty troublesome to me. All right, so that's where it's at the moment. Now, in saying that, of course, we do have a lot of technologies emerging and developing across the board. There's at least 16 major industries. We're seeing some pretty new next-level technology evolution. So we'll see how that goes. That certainly gives some justification, but ultimately market size is very important as well. And I think they might be burning that out, especially attacking the energy sector, which is really the lifeblood of economies. So we'll see how that plays out. All right, so I think that was that one. And let's have a look at we looked at Paraguay, looked at the US markets there. And we've also looked at these ones here as well on the Cointelegraph, so you can check that out as well. We'll close that one out. And yeah, that's pretty much it for that. Let's have a look. There wasn't a lot of news up. Probably be some more news next week. We'll definitely do another general Bitcoin and crypto chat as well next week. And we'll just wait for these prices. I was obviously with Ethereum under 2,000. That's not a great sign, but we'll see where that heads at the moment. And I think I said that in yesterday's video, we might get down to $1,100-$1,200. So we'll find out on that one. All right, so I hope you guys enjoyed this one. Feel free to subscribe, like, and share. Hit the bell for the notifications, and I'll catch you next time. Cheers, and also catch me for the auction close later today. I look forward to it. Cheers.